You know, automated trading strategies are incredibly powerful. But what happens when that power is flying blind? Well, it's a total recipe for disaster. So today, what we're going to do is build a full-fledged cockpit for your trading algorithm. We're going to give it the situational awareness it desperately needs to navigate the markets. And, this is the big one, manage risk so it doesn't just crash and burn.
So, let's get right to the heart of the problem we're tackling today. Think about it. You could code the most brilliant, sophisticated trading robot ever created. But if that robot has absolutely no idea about the health of the account it's trading, well, it's basically like a pilot in a brand new fighter jet with all the instruments blacked out. It's not a question of if things are going to go horribly wrong, it's just a matter of when.
And this is the ultimate disaster we are trying to avoid. It's called an account stopout. And trust me, it's as bad as it sounds. This is when your account's funds drop so low that your broker just steps in and starts force closing your positions. And you can bet they'll do it at the absolute worst possible time. This is the catastrophic failure, the red alert that every single automated strategy must be coded to prevent.
All right, so the solution. Let's build that instrument panel. How do we give our robot its senses? Well, MQL5 gives us a fantastic set of functions that do exactly that. They're our gateway to real-time data on pretty much everything, from your balance all the way to your broker's server name. This is how we turn a blind algorithm into a truly informed pilot.
And you know what's great? MQL5 keeps it simple. It all boils down to just 3 core functions, and each one is for a different type of data. First, you've got AccountInfoDouble. That's for any decimal number, like your account equity. Then there's AccountInfoInteger. That one's for whole numbers, things that are true or false, like checking if trading's even allowed. And finally, AccountInfoString is for text, like get in your account's currency. That's it? Simple, right? But believe me, these 3 are incredibly powerful.
Okay, let's dive into the key dials. We're talking about reading your financial health. These are the most critical metrics you need to watch for your robot's survival.
Okay, first things first, we absolutely have to nail down the difference between balance and equity. They sound similar, but they're worlds apart. Think of your account balance as the money that's settled, the cash in your wallet after you've paid for everything. But your account equity, that's the live, breathing, real-time value of your account. It's your balance plus or minus the floating profit or loss on all your open trades. And that right there is why equity is the one number that really, truly matters for managing risk in the moment.
So that equity number gets broken down even further into what we call margin. Account margin is pretty simple. It's the chunk of your equity that your broker is essentially holding as collateral to keep your current positions open. And whatever's left over, that's your account margin free. That's your available firepower, the money you can use to open new trades. It's a really simple equation. Your total equity is just the margin you're using plus the free margin you have left.
Okay, so we've got equity, margin, free margin. It's a lot to track, right? You might be wondering, is there one single metric, one number I can look at for a quick, at-a-glance health check? And the answer is a resounding yes. It's called the margin level. And I'm not exaggerating when I say this is probably the single most important number your trading robot needs to be watching, like all the time.
So what is the account margin level? It's just a percentage, but it's a super powerful one. It shows you the ratio of your total equity compared to the margin you're currently using. And you can grab this number directly with that AccountInfoDouble function we talked about. The formula is simple. It's just equity divided by margin times 100. High percentage, you're in good shape. Low percentage, that's a major warning sign.
So, let's say you see a margin level of 150.5%. What does that actually mean? Well, it means your current equity is about 1.5 times bigger than the margin you need to hold all your open positions. The higher that number goes, the healthier your account is and the more of a safety buffer you have against the market moving against you. Seriously, keeping this number high is your absolute best defense against getting a stop out.
And here's exactly why that buffer is so critical. Your broker sets 2 very important lines in the sand. The first is the account margin so call or margin call level. That's your first, hey, you might be in trouble warning. But the second one, account margin so, that's the stop out level. If your margin level drops to this percentage, it's game over. The broker's system takes control and starts closing your trades. For any automated system, knowing these 2 values isn't just a good idea. It is absolutely non-negotiable. All right, so checking your financial health is job number 1. But a good pilot always does a full system check before takeoff, right? It's not just about the fuel. You got to make sure the controls work and you're actually cleared for departure. Let's build that same kind of check for our robot. So before your robot even thinks about placing a trade, it needs to do some basic identity and permission checks. It needs to ask itself, am I using the right account currency for my risk calculations? Am I connected to the live account server, or did I accidentally get logged into the demo account? And maybe the most important question of all, is trading even turned on? Checking Account Trade Allowed and Account Trade Expert is crucial because it stops the robot from trying to trade when it simply doesn't have permission.
Okay, we've got all the instruments now. We can read our financial health, we can check our system status, so the last piece of the puzzle is putting it all together into a routine. A disciplined, repeatable pre-trade safety check that runs every single time before placing a trade.
And this is a fantastic 4-step model to follow. So step 1, verify your permissions. Are Account Trade Allowed and Account Trade Expert both true? Easy enough. Step 2, check your free margin. Do you actually have enough account margin free for the trade you're about to make? Step 3, and listen up because this is the real pro move. You need to simulate the impact. Before you pull the trigger, calculate what your new margin level would be after the position is opened. And that leads to step 4, confirm your safety buffer. Make sure that new, simulated margin level is still safely, comfortably above that account margin so level. This is so important because a trade that looks good on paper could be the exact one that pushes you over the edge.
And when you put this into code, it can look as simple as this. It's just a basic if statement, but think of it like a gatekeeper. It's asking 2 questions before it lets anything through. Do you have enough free margin, and is trading even allowed? Only if the answer is yes to both does it proceed to the trade logic. This little piece of code is a super powerful line of defense that can stop your robot from making a catastrophic mistake.
And really, that's the big takeaway here. By using these simple account information functions, you've taken your robot from flying blind to having a full-blown instrument panel. It's not just blindly reacting to price anymore. Now it's aware of its environment, it knows its own resources, and most importantly, it understands its limitations. It can finally navigate the market safely and intelligently.
So this all leads to a really interesting final thought, doesn't it? Your robot can now see its own margin, it can monitor its own health, but what about everything else? What other environmental data should it be looking for? Things like data about the specific symbol it's trading, or the status of the terminal itself. What else could it be checking to make even smarter decisions? Well, that's a great question, and maybe a topic for another time.